What is going on, YouTube? I am back with another one, and in today's video I'm going to be showing you guys my favorite model that has generated me over 6 figures in prop firm payouts alone. These are all verifiable, these are all legit. If you guys follow me on Twitter, Instagram, even TikTok, I've posted these payouts, I've shown you guys. So the favorite model, my favorite model, one of my favorite models, not just one, but one of my favorite models is the unicorn model. It's going to be a very simple model. It's going to be a very simple video. I'm not going to take up too much of your time because you guys know me. I like getting straight to the motherfucking point. So let's get into it. Now, before I go ahead and start this video, I do want to let you guys know, if you guys do not know what a breaker block is, go and watch a video on breaker blocks. I think I actually have a video on my channel about breaker blocks, but if you guys don't know what a breaker block is, go and watch a video on what a breaker block is. I recommend the ICT one. I think I'll link it in the description just so you guys don't have to go look for it. And go watch that video, then come back to this one, and you guys will know or be familiar on what a breaker block is, because that's pretty much the premise or one of the parts of this model, this unicorn model, is a breaker block and a fair value gap. Now let's get into it right here. The unicorn model is basically something like this, right? You have your leg down. Let me go ahead and zoom this out. You have a breaker block somewhere in this leg right here, right? You got a high, you got a low, you got a higher high, and then you have a breaker block, right? Let's go ahead and shade this in so you guys don't get confused here. So let's say this is your breaker block, okay? The unicorn model is basically a breaker block combined with a imbalance, right? Or a fair value gap. So imagine you had a breaker block that was in this leg, and then in this leg, you also had a fair value gap. So it's pretty much a breaker block plus a fair value gap. It's literally all it is. And most of the time, you will get a retracement back into the breaker block and fair value gap. So let's say there's a fair value gap somewhere like right here, right? You got, this is like the 15-minute time frame. All time frames are fractal. This works on the 1 minute, 5 minute, 1 hour, daily, weekly, whatever, right? It just, whatever time frame you are on, recognize whatever time frame you are on. It's going to take longer, like on the weekly, the daily. It's going to be a lot faster on the 1 minute, 5 minute, 15 minute, etc. So most of the time you will get a retracement back into the breaker plus fair value gap, and that is where you would want to take an entry right when it taps into the, preferably the fair value gap, not just the breaker block. This is where I will always take risk and put a trade on. Whenever I see this setup, you guys know in the Discord, every time I see a unicorn setup, if it aligns with my other confluences, like maybe I'm looking at the quarterly theory, maybe there's a macro, right? You guys don't need to worry about this. So anytime you see this setup, these are one of the most high probable setups that there is out there, right? This model right here has generated me a shit ton of money with prop firms, okay? And I'm letting you guys know what my favorite model is. It is this one, okay, by far. So if you would want to enter on the fair value gap of this unicorn model, you would place your stop. Now, I know a lot of people are going to be like, where do you place your stop in the unicorn model? Where I place my stop is wherever the fair value gap is, that candle that formed it, I would place my stop on the candle's high, right? And I'll show you guys some examples here in a little bit. But this is pretty much the unicorn model, right? This is the unicorn model in a nutshell. It's pretty much a breaker block with a fair value gap. You enter, put your stop at the candle's low or high, depending if it's a bullish or a bearish unicorn model. And then just aim for whatever your drawn liquidity is, right? That's also another important thing that I need to stress, right? You guys need to make sure you guys have a clear draw on liquidity, and then you take the unicorn setup, okay? Don't just take unicorn setups because there's a unicorn setup. Make sure you have your draw on liquidity mapped out, ready to go, and you should be good. It usually hits like 90% of the time. I'm not even bullshitting. So if you guys don't know what draw on liquidity is, I have a video on my channel. Go watch it. It's a very good video. You guys will understand everything you need to know about draw on liquidity, but it's pretty much the unicorn setup. Now let's go show you guys some examples. All right, guys, this is a perfect example of a bearish breaker block. Now I know a lot of you guys may not see breaker blocks very fast, so I recommend getting the breaker blocks with signals with Lux Algo. I'll go ahead and put my settings here so you guys can copy them if you guys want. Go ahead and pause the video and stuff. Take screenshots. I'll go ahead and scroll down a little bit. But this is pretty much all the settings that I have on mine, right? So a bearish breaker block in a nutshell is just the last down close or last up close candle in the price leg that makes a new high or new low when you're looking at breaker blocks. So in this case, it's this one right here. Breaker block, this candle closed below it. So there you go. That's a breaker block right there. Wait for this candle to close. I'm on the 15-minute time frame here. You wait for this candle to close, and now guess what? You have a fair value gap right here. So not all the time do you need like a fair value gap to be right in alignment with the breaker block. It could be something like this where you have the fair value gap and it's like at the very top of the breaker block. I would still consider that a unicorn. I would still go short at this fair value gap and place my stop right here. So it would look something like this. I would place a limit at the fair value gap right here in case the next candle taps in. And then I would place my stop above this candle's high right there. Because if price is going back up here and it's closing a body above the 50% of this gap right here, then it's most likely going to push up. But I'm telling you guys, this model here, this unicorn model, has like a 90% hit rate. I'm not even lying, right? And then you would target your drawn liquidities, right? So this is a 2.21 RR. It's not bad at all. Sometimes I'll take 1-to-1s, right? If I'm really confident in this, like sometimes it will be 1-to-1s and I will go ahead and smash it anyways. But probably with less size, right? Right here, I would probably go a little heavier on this since it's a 2.21 RR to 2 RR. You're going to make double your money, a little over double your money. So I would go a little heavier on this, especially because I only trade on the 5-minute, 15-minute time frame. So I'd be way more confident in this. Also, you have a break of structure there. So very high confident trade here. You would aim for that low. You would trim there and you would take TP. You would take your full TP here. And you can even aim for this low if you'd want, leave a runner down there. But you always have to trim, guys. Once you know you're drawing liquidity and you see this unicorn model pop up, smash it. I'm telling you guys, this is a very good model to have in your war chest in trading because this model right here, 90% hit rate. I promise you guys. Let's see what happens after you set a limit here. And let's see. So there you go. In one 15-minute candle, it taps you in, taps the 50% of this fair value gap, and it hits all your TPs in one 15-minute candle. Now, I just want to stress this to you guys. I don't look at the 1 minute. I don't look at the 15-second. I know I have them here, but I hardly look at them. It just depends on the situation. Like if I see this here on the 15-minute, I'm smashing that all day, right? I'm going in on this setup right here. This is a unicorn setup, one of my favorite setups. I know I've said that a lot already, but I encourage you guys to go back test. I encourage you guys to adopt this model into your trading plans, into your trading setups and stuff, and get very familiar with this setup because this setup, again, has a very high win rate, right? I'm always telling you guys, those of you in the Discord, you guys know I'm always talking about unicorn models. I'm always talking about breaker blocks and shit because it really works. It's a very high success rate. So let me go ahead and show you guys a bullish example and then we'll go ahead and end this video. All right, guys, so here is another example of a bullish unicorn model, okay? And we actually did take this trade. It was I believe last Wednesday. We took this on the 1 minute chart. Justin actually called this out and I ended up following. But this is a perfect example of a unicorn model, right? We have a fair value gap right here on the 1 minute chart. I know I said I don't trade on the 1 minute, but it just depends on the situation. I will cycle through these time frames, but mainly I am on the 5-minute and 15-minute. But this is a perfect example right here, right? We have a breaker block. It's the last up close candle of this price after taking out this low. So we have a high, or we have a low, high, and then lower low. That's a bullish breaker right here, paired with a 1 minute fair value gap right there. We aim for this high, and then we could aim for this high right there, right? Leave a runner up there because you never know what happens after you sweep this buy side liquidity into this 1 minute fair value gap. There's also a 15-minute there, I believe. But let's see what happens here, right? You go boom, boom. You would set a limit at this fair value gap and you would put your stop right there, right? So you could do this. You set a limit right here at this 1 minute fair value gap. You could put your stop at this candle's low, or you could put your stop down here. It doesn't really matter. Whatever you're comfortable with, depending on how much size you're going in with, etc. Right? I would personally just put it right there because there's no reason for price to come down to this low. Sometimes it can, but there's no reason for it, right? So if you want a little more wiggle room, depending on the situation, you could always put it at the low that swept the previous low, like this in this example here. Anyways, you set a limit there, put your stop wherever you need to, and then you would target this high. And look, this is a 1-to-1 ratio, right? You could still make money with the 1-to-1, guys. You don't need to fucking go for the 40 RRs, okay? And then you could leave a runner up to here. So if you hold your full position, this is over a 3R, close to a 4RR, okay? So let's see what happens here. Tap into that fair value gap, right? And then we just start pushing. This is exactly why I always set limits at the fair value gaps versus the breaker blocks, because sometimes it doesn't tap the breaker block. But as long as the breaker block is there, that's great. That's like great confluence to have, right? That's a unicorn model right there. I always enter on the fair value gap. And if we keep going, like if we dig into the breaker block, then I would possibly add another position, right? Average down. And then we just chill. You could trim right there at a 1-to-1, leave a runner, set stops to break even, see what this does, and then it stops you out, okay? I wouldn't re-enter on these anymore. I mean, you could, but I personally wouldn't. I would just go for the 1-to-1 and then just leave stops at break even and leave a runner. I would have been stopped out at break even there, but that was a good trade. That is a bullish example of a unicorn model there. And again, if you guys are not familiar with breaker blocks, go watch that ICT video on breaker blocks. I'll probably link it in the description. And if you guys are not used to seeing breaker blocks, get this indicator here, breaker blocks with signals by Lux Algo. I usually have this on sometimes just because I'm not really like paying attention, like, oh my God, there's a breaker block right there. I'll just flip this on and then it'll print it for me. And then I'll be like, oh, there we go. There's a breaker block. Is there a fair value gap on it? Is there a fair value gap around it? There's a unicorn model. Let's set a limit in the fair value gap. Boom, smash it. TP hit. Boom, get fucked. Right? Like, like it's that easy, guys. It's not hard. This setup right there has made me so much money in the past like 2-3 months. So I would encourage you guys to adopt this unicorn setup, this unicorn model. It's one of my favorite ones out there. And if you guys enjoyed this video, please leave me a like, please leave me a thumbs up, a comment on what you guys want to see next, maybe more of these educational videos. What do you guys want to see? You guys want to see more live streams? You guys want to see more trade recaps? Let me know what you guys want to see. I need to know what the people want to see on this YouTube channel. You guys want to see vlogs? What do you guys want? You guys want to see workout vlogs? Shit, what's good? Let me know, guys. And if you guys want to join Tactical Traders before the year ends, I would recommend you guys do so, because the prices are going to go up by the new year in 2024. They're going to go up to $200 a month. So get it, or I don't know, maybe even $250 a month. I don't know. We have some good fucking analysts in there, including myself, Justin, and DJ, possibly looking to add more. So if you guys want beast ICT traders, just get in Tactical Traders, bro. Lock in the price now before it goes up at the new year. So I will catch you guys in the next one. It's been good so far. Again, if you guys like the video, leave me a like. Catch you guys in the next one. Peace.